And so now you see how important it is, where I mentioned in part 3 where, I'm sorry, in part 3 where, part 4, I'm sorry, where individuals who don't have an operating agreement, how by default by law, it probably could have came down that way too, because if they didn't have operating agreement, they all would have been considered members. So he had just as much equal control. So it's possible that could have been an argument. But also getting these operating agreements offline, that type of provision can possibly be written in these operating agreements, and individuals may not know that they are, you know, binding themselves to such provisions, and then have somebody a manager. So that's why it's important to understand what an operating agreement can do, what having one can protect and or bind you to, and what not having one can do. So this is where it's important, as I was touching on, to properly form an LLC is more than just entering information in the Secretary of State. It is entering the information and making sure that you are in compliance on every level as if you were a corporation or anything else. Making sure you have all your documentations of how you actually need to operate. But this is, I just wanted to point that case out when I came across it, to kind of bring home what I was, you know, trying to convey when it came to operating agreement and member manage versus manager manage. You want to make sure someone can't come and take everything from you or make decisions that you wouldn't have made or bind you. Or if it is fine for you to do it, then, you know, just make sure that you know you're doing this intentionally. If you know that you want someone to have broad authority, then know you're doing it intentionally and what that can mean later. If you don't want them to have it, then you need to know that as well. All right, so real quickly, to wrap up, to talk about the taxes. So we talked about this a little bit when we talked about the brief history and touched on it sprinkled throughout, where the LLC, if you are a sole member, meaning that you are the only owner of it, it's not you and anyone else, it's just you, then that's considered a disregarded entity. We mentioned how that happened. We talked about the history with the IRS when they decided to do that. And as a disregarded entity, they disregard what the company makes from, you know, having to file a separate tax return. They disregard it, and it flows through to your personal tax return. So you will file a 1040, and then you'll file a Schedule C or any other schedules that are actually needed, and it will reflect your profit and your losses. So even though you're looked at as a separate individual from this legal entity, when you file taxes, it is okay. The state and the federal says it is okay to look at any profits and losses and combine it all as one.